I have a joke for you. What do you call selling an out of the money call and an out of the money put while buying a further out of the money call and buying a further out of the money put? Huh? Type the answer if you know it down below in the comments. I'll wait a second for you to type it. Alright, time's up. For those of you who didn't get it, it's an iron condor. Funny, right? I cracked myself up. Bad jokes aside, hey, what's good? It's your boy Matthew Michael, and in today's video, we'll be going over the benefits of and walking through how to construct an iron condor on Robinhood. And for those of you who are really into the math, at the end of this video, we'll even take the time to break it down for you a little bit. So if you're new here, please be sure to subscribe and hit the bell notification icon so that you don't miss any future content or giveaways. I post 2 new videos every week and would absolutely love to have you as part of the family. Also, if you could please do me a huge favor and smash that like button, I would really appreciate it. I work hard on these videos and it's all I ask in return. I also have an Instagram and I'm just gonna put it right here. Also, if you're watching this video on the day I post it, it's my birthday, so feel free to run over to Instagram and say happy birthday. That's just if you're feeling extra nice. But one last thing before we get into the video that was just too good not to share. So right here we have a video of me opening some free stocks on Webull, and it's just too good not to share with you. As you can see, I got 2 shares of GE and I got the share of Starbucks. If you sign up for Webull using my link down below in the description and make a deposit of any amount, even that $1 that you were going to put towards fractional shares, Webull will give you 2 free stocks valued for up to $1,400 just for signing up and making a deposit. And the second free stock is guaranteed to be a minimum value of $12. That one stock alone means that a $1 deposit will yield you a minimum 1,200% return. So if you decide to use the link and get some free stocks, let me know down below in the comments if you get something good. I'm genuinely interested. But without further ado, let's get to the video. Alright, iron condor. So what an iron condor is none other than the strategy you want to use if you have absolutely no idea what direction the market is going, but you still want to take profits. The good thing about iron condors is you can take profits whether the market goes up, down, or trade sideways. Now the best scenario for this would be for the market to trade sideways, but you can still take profit in all of those conditions. Now looking at an iron condor, your profit potential is going to be 100% tied to the spread you make and the amount of risk involved. The closer to the money the options you sell, the greater the potential profits. But in order to manage your risk on these, you have to buy further out of the money options in order to minimize your risk. The thing about iron condors that are absolutely beautiful is your risk and your profit is 100% constructed by you, and that you get to make money as time goes on. So the closer the expiration the contract gets, the more premium that you get to collect. And I'll be sure to show you everything on Robinhood because I know it can be a lot. But just a couple more things before we hop into the platform. The most profit that you can make off an iron condor is the price that you initially sell it for. And the most that you can possibly lose off an iron condor is the difference between the widths of your strikes minus the entry price. Don't worry about this too much right now. We'll go over it in a minute on the platform. But one last thing to note is that your max loss is going to be the collateral required to open that trade. So if you're selling an iron condor, you can see what your potential max loss is just by taking a look at the collateral required. So now that we're all ready to take profits off time decay, let's hop into the handy dandy Robinhood and build ourselves an iron condor. Okay, so here we are, we're in the handy dandy Robinhood and we're going to construct an iron condor. And I kind of feel like doing McDonald's. I'm not really too familiar with McDonald's charts and the way it trades, but I just want to show y'all if I were to do iron condor on a company that I wasn't familiar on, this is how I would do it. So here we are at McDonald's. On the week it looks like it's hit a high of 216.83 and a low of 212. On the month, 217, low of 207. Okay, so just looking at that month trading range, I'm just gonna look at that. If I were to do trade options, yeah, we're just gonna look at McDonald's. We're gonna do the exact same strikes and we're gonna look at them at different times. So McDonald's is trading at 214.56. I'm gonna put my closer one right here at 210 for the put. So I'm gonna hit select. The ones closer are gonna be the ones you're selling. The call I'm selling is gonna be 2 from the strike, 2. And now the call, I'm just going to put it 1 further. Okay, And this will give us a total credit of $1.61. I'm actually going to do this trade and, you know, maybe hold on to it a bit and show you how it goes. But yeah, hit select, and then yeah, you see the Iron Condor and you see the total credit. So this total credit right here is the most that I can make off this trade. And then as you see, people are trying to pay $81 for it, but people are asking $2.13 for it. If I wanted this to fill right away and know that I got into this Iron Condor, I would probably sell it closer to the 86 cents that people are trying to pay to get it. But I'm just going to hit review and it's going to do the price that's right in the middle. I'm going to hit continue and then I'm going to swipe up. And one thing to look at right here where it says collateral, that's the most I can lose off this trade. So with the collateral, it's actually taking the $152 that I'm receiving as a credit, and then it's going to take $98 from what's already in my account, and it's going to put that on hold too. And the reason it's taking 98 is because 152 plus 98 is 250, and that gives us the collateral we need. So I'm just going to swipe up just so you can see. Okay, and we got filled at that price, and I got some time on it, so I'm not too worried about it because I can always get out of it. Let me show y'all how it looks in the platform. Okay, so if we come to our positions, you see that right here for the Iron Condor, you actually profit as the value of the Iron Condor goes down. So you see we got a credit of 152. That was the price we sold it for. It's now at 149. Our total return is $3. So if I wanted to get out of this right now at the price of 149, I've already collected $3 profit. So yeah, before we look at a weekly one, let's hop over to the options profit calculator just to take a look at how I could potentially profit off this in the future. Okay, so we're here in the options profit calculator. I'm gonna run through how you would calculate profits using the options profit calculator and look at how it'll affect the price over time. We're gonna hit Iron Condor, and then we're hitting the symbol MCD for McDonald's and then get price. Okay, now we're going to select our option. So I got to pull up Robinhood to see exactly how I wrote this. So the long put is going to be the one you bought, which in this case was $207.50. I paid $270 for it. Okay, so we got that in, and then the short put was the $210, and I paid $348 for this one. All right, now we're going to the call side. The long call is the one I bought, and it's the $221, and I paid $188 for it. Now I have to fix that short call. It was actually a $217.50 call, and I actually paid $262 for it. Okay, so we got them all put in, and as you see, I hit calculate, and we came out to the cost I had to pay, which was $152. And right here, as we take a look, you can see the potential profits and where it'll go over time and where it is right now. So I personally like to look at the profit and loss dollar value. Right now, it's looking like more of the profit is if the stock goes down, but if it stays where it's at, we're taking profits too. The more time you hold this, if you decide to get out, the more profits you will have if it stays in this range. But yeah, that's going to be it for the options profit calculator. Now let's go in and look at a shorter term Iron Condor. Alright, so here we are back in the handy dandy Robinhood again. This time we're going to take a look at a McDonald's Iron Condor that would expire this week, just to show you the difference in price and how it moves along. So yeah, we're going to hit trade and we're going to hit February, and we're going to do all the exact same strikes. Okay, so McDonald's actually moved above one of the strikes, but we're still going to pick the exact same strikes. We had 210 being our lower end and 220 being our upper end. Okay, so we're still going to do the same. We're always going to sell the strikes that are closest to the money, and you can think of this line being the money. For an Iron Condor, you're always going to sell the ones closer to the money and buy the ones further out, so you get a credit. Any type of credit, you're selling closer to the money and buying further out. So on the sell side, for the put, we're going to sell the 215 and then sell call. We're going to sell the 275 and then we're going to buy the 220 and we're going to buy the 210. And I actually did that wrong on the 210. That was for the put, so I need to switch over to put and then buy the 210. I was wondering why it was off. Okay, and as you see, we have a $120 credit. So minimum credit is $120, and if I hit review, you can see that I still need $10.75 in order to place this order. So we're not going to go through with it. I don't have enough. Actually, if I wanted this to change, just to show y'all, I can put the price that I'm selling it up for higher. So I can do that instead. So my collateral would be $250, and this will tie up all my money. So I'm not going to do that, but now let's hop over to the options profit calculator and take a look. Okay, so we're in the options profit calculator, and just for the sake of time, I already put in all the exact same strikes for the 28th of February, and the value didn't come out to be exactly the same because I didn't change the cost of each individual option to match Robinhood. But just for a general purpose, just for the sake of you seeing how time affects the option, we're still taking a look at it at this price. So right here at the midway price for this Iron Condor, we received a credit of $82 right off the back of the Iron Condor, and as you can see, each day that goes by that it stays in this trading range, you collect more premium. So it looks like anywhere from 217 to 210 you collect the full amount of premium, and yeah, that's just good to know. If the Condor was trading in this range and then you decide you're happy with your profits and you don't want to see it through to the end, you can still collect profits and still move on to something else. Iron Condors are pretty cool, but one last quick thing, I just want to show y'all how to do the basic math for calculating how much you're going to have to pay for this Condor. We're going to use the Iron Condor I actually bought just for example. So how you find your max loss is you're going to take the difference between your spread and you're going to subtract the credit you paid for it. And when I say difference between spreads, I mean like right here, I bought a call for $220 and I sold one for $217.50. So the spread between what I buy and what I sell is $2.50. This would equate to be $250. And if you go to the put side, it's going to be the exact same. The spread on that side is $250. So no matter what side it goes to, in order to find the max loss in either direction, you would just take the spread, which we already figured out was $250, and we're going to subtract the price we paid for it. So let's go to the calculator. 250 minus 152, and we get $98. So the most that I can lose off this is $98. The most that I can profit off of it is $152. That's not a bad risk to reward. So you just learned what an Iron Condor was, how to build it, how it profits, and how to calculate its profit. Now all that's left to do is get in and start paper trading. Don't forget to sign up for Webull using my link down below in the description and deposit $1. That's 2 free stocks valued up to $1,400, and the second one's going to be a minimum $12 in value. So please don't miss out on that guaranteed 1200% return. If you enjoyed the video or learned anything, smash the like button. If you made it this far and you're not subscribed, please be sure to subscribe and hit the bell notification icon so that you don't miss any future content or giveaways. I post 2 new videos every week, and I would absolutely love to have you as part of the family. And last but certainly not least, thank you so much for watching, and peace.